morning. Welcome to IG's early morning call. It's Friday, the 8th of March. Let's take a look at the headlines as we're monitoring what's going on with the dollar as it continues to drop in the markets on from yesterday's second day of testimony from Jerome Powell. And the suggestion is out of this is that the Fed is ready to cut interest rates, possibly at speed, and as the shift focuses from inflation to growth. In amongst some of the other headlines, we got record highs on the S&P 500 on Wall Street yesterday. Nasdaq also up on the session. We've got record highs in the 24-hour markets at the moment for the French CAC 40. Record highs at the moment on the IG platform for the German DAX. We're looking for a stronger start as well in the London markets on the session today. And as we monitor what's happening in terms of earnings, it was a good night last night for Gap, up 9%. The Old Navy brand at Gap leading the stock to those highs on from the earnings that we saw which beat expectations. So money going into risk assets, coming out of volatility, second day in a row of losses for volatility. We got gains pretty much across the board. In the London markets, we've seen a spike up at levels intraday on the 24-hour markets not seen since the back end of February. So it's been a good start to the month overall. 76.95 is where we're standing at the moment. We are up on yesterday's cash session, but this is where the real news is. On from the news yesterday coming through from the European Central Bank that interest rates kept on hold. Expectations are next move will be down. Just a question of when. Could it be June? Possibly, according to statements yesterday, although obviously still wanting to see a little bit more of an easing in terms of inflation. We've got a red candle on the German DAX and 24-hour markets at the moment, but it's come subsequent to the rise to a new record high at 17,910 earlier on in the session, looking for a stronger start there. French CAC 40, same price action, 46 points above the 8,000 level in the session in today's trade. Yesterday, we sailed past the 8,000 level for the first time ever on the French CAC 40, and we're sitting comfortably-ish above that at the moment. There is a red candle, but it's nonetheless got the entire candle structure above the 8,000 level on the French CAC 40, looking for a stronger start there. It's been a good day across the Asia-Pacific markets with gains pretty much across the board. In terms of some of the individual moves on the major benchmarks, you can see there the Nikkei 225 up 0.75% at the close. At the close, we got the S&P ASX 200 in the Australian markets, better off by a margin of in excess of 1%. And the Hang Seng Stock Index also enjoying a lift as well today, representing the Chinese markets with a gain of 1.33%. And that's where we join what's happening as well with what's going on Wall Street, because yesterday we saw gains across the board for all the major equity indices there. New record high for the S&P 500, new record high for the Nasdaq Composite, up 1.5% in the session in yesterday's trade. Dow also gaining, but not to a record high. I want to show you this chart before we move on. This is an all-session stock of NVIDIA. Now we're up 90% so far this year overall. Yesterday, it's a Marabozu candle. We see a number of these on here. Marabuzus are interesting because what they do is they represent a market where they've got the move where there has been no change between the high. There's a change between the high and the low. You go into the bottom of the candle, you exit at the top. At the start of the session in these Marabozu candles, there were no sellers and no sellers either at the close, which means you get no wicks on any of these candles. Now, this means that there is this enthusiasm to continue buying this stock, the MACD pointing higher, everything indicating more and more gains on this market. NVIDIA is an interesting stock. Of course, it's right in the thick of the AI, and that's really pushing things higher. I haven't even seen any news out in the last few days, people just piling into this stock. And this has pushed up tech stocks across the board. Now, yesterday we saw this push high to 18,342 intraday, and then came a little bit of a sell-off in the back end of the market yesterday, opening where we closed out yesterday's session on the 24-hour markets. But the S&P 500, which is a blend of tech and old economy stocks, rising to a new record high yesterday, intraday high at 51.65, new record closing high, and we started off today's session pretty much at the top of the structure that we've got here being built into the S&P 500. So every single pullback is an opportunity for people to regroup and traject onto a new record high. That's what's been happening. The Dow, although rising yesterday, didn't actually climb to a new record. In fact, we're somewhere away from that, 39,285, that record high coming intraday back on the 23rd of February last year. So March has been a little bit of a ho-hum month so far, and a bit of a consolidation. Last couple of days, we've got gains. You can see the push higher we saw yesterday, that rise of 1/3 of 1% of the cash session, matched by the rise on the 24-hour market. So tech stocks very much taking the rise on the in their stride, if you like, really pushing up. Meta Platforms up 3.3% yesterday, 45% year to date gains so far for Meta. Another example of some of the tech stocks on the way up. Now, this coming after day 2 of the testimony on Capitol Hill yesterday by the Fed Chair Jerome Powell, answering questions from lawmakers. Those lawmakers, those legislators, of course, go to the polls later on this year in the elections, and they've got to go into that knowing that the economy is in safe hands. And it certainly seems like it possibly, almost certainly is. Whilst no timetable was given by Jerome Powell and the Federal Reserve for interest rate cuts, he noted that the day may be coming soon. Let's take a look at a quote we've pulled out from what we heard yesterday. They're waiting for more confidence that the inflation is moving sustainably at 2%. When we get that confidence, it'll be back to looking at ways in which we can help the markets by cutting interest rates. It's a question then as to when that happens. The market's thinking it's going to be sometime in June. The dollar index, look at this chart here, suffering the third straight week of losses, briefly hit 7-week low yesterday. At the beginning of the year, futures traders were betting the Fed would start cutting in March. This last rate meeting here, 31st of January, that was the point then. And then all of a sudden, things started to change. The dollar rose, and now the expectations are for June, with 4 reductions totaling a full percentage point by the end of 2024. So that's where we are in terms of the dollar basket. Meanwhile, throughout the week, we've seen a lot of jobs data coming through. We've seen JOLTS, we've seen the weekly jobless numbers, we've seen the ADP, the private payrolls. Today, we've got non-farm payrolls. On Wednesday, the ADP showed that US private sector created 140,000 jobs. JOLTS job openings come in at least 8.86 million, marginally below consensus, but nonetheless, job openings are there. And yesterday, the number of people claiming unemployment benefit remained at 217,000, 2,000 more than anticipated. Now, this points to a gradual easing of the labour market. And the number of people who quit their jobs last month fell to a 3-year low. This bodes well for slower wage inflation overall. Let's take a look at what we've got in terms of expectations for non-farm payrolls today, because job creations are expected to rise by 200,000 in February, less than January's 353,000. The unemployment rate is seen holding at 3.7%. Average hourly earnings, 0.3% month on month, 4.4% year on year. Both those are down from the prior month. Let's go back to this chart here, euro dollar chart. After 1, 2, 3, 4, 5 days of gains, a little bit of money taken off the table. Yesterday, we saw the highest print we've seen there since the 15th of January. This push higher for the euro is really all about the US dollar. One area of the market that is not about the US dollar particularly is what's going on in Japan. The yen is up today. This is the dollar down against the Japanese yen. Yes, it's all part of this dollar move, lower against a whole basket of currencies. But this move yesterday exacerbated by expectations that the Bank of Japan is mulling over exiting its loose monetary policy, possibly in April. That's certainly what the markets are now believing. This print we've seen today has been the lowest print for the dollar against the Japanese yen seen since the 2nd of February. Let's take a quick look at what we've got in terms of economic data we've just seen break across the German economy. German industrial production numbers have come through, rising 1% in January. We had been expecting a rise of 0.6%, so that was good news. Producer prices falling by 4.4 in January. Expectations have been for a drop of 6.6, but you can see the direction of travel in terms of what we've got there. And at 10 o'clock this morning, we've got GDP numbers coming through in the Eurozone. Final estimates of Eurozone GDP for the fourth quarter coming in expected flat, 0.1%. So you can see the direction of travel on growth, which is why we markets are desperately hoping in central bank will kick in interest rate cut possibly in June. One final chart I want to show you is this on the foreign exchange markets. It's the sterling trade against the US dollar. It is, as of the high point today, the highest intraday print that we've seen since the 28th of December. So it is the highest point we've seen for the year for sterling against the US dollar. And when we break the 128.28, The next line to watch out for is the 129 level, the highest point we've then seen since July last year. And that, for me, is the price target in what is an interesting trade for sterling, which I suspect could well see further upside to go. Stop loss just under recent price action, giving an opportunity to get some protection in a trade that will take you up, as I said, potentially to 129. Now, let's move on to some of the stocks worth watching in today's session. I want to go through 3 charts for you very quickly. I want to begin with Just Group. Now, this is a retirement company, which has done so well recently. Last few days, another Marubozu candle here, ending at pretty much the top at 89 pence the share. This morning, we've seen underlying profit up 47%, £377 million, driven by significantly higher new business. Retirement income sales up 24%. Momentum, the company says, continues into this year. These are numbers out through to the end of 2023. Into 2024, it's been a strong start to the year. The defined benefit market, a record year in 2023. They're building on that. Guaranteed income for life market was the highest level in a decade. That continues as well. And I suspect we could well end up getting a print beyond this 89 pence level, which was the high that we saw back on the 23rd of January. In yesterday's session, we did pierce that, albeit very briefly, taking us there briefly to levels not seen since July last year. But I suspect we could end up seeing some more gains in Just Group at the start of today's session. Just want to run through a couple of other charts I think worth looking at. I'll be looking at what happens is Frasers at the start. The Mike Ashley's Frasers Group is putting Matches for Fashion, the luxury online clothing platform, into administration less than 3 months after buying it, around £50 million just before Christmas. Yesterday, we saw a small gain there. I suspect this might see a little bit of air taken out of the Frasers tyres at the start of the day's trade. We've got the stock opening at 807.5. This is the line of support down here at 781. And also in the European markets, in Germany, this is HelloFresh Group. Look at this. This stock was up at a record high back on the 19th of November 2021 at 97.51. This morning, the company has said it scrapped its midterm revenue outlook of €10 billion and €1 billion in adjusted core profit, citing tougher market conditions. This is a Berlin-based company. It didn't provide details on expect to reach its target, which was originally set for 2025. HelloFresh now expects its 2024 core earnings to come in below expectations. It has had to deal with higher marketing expenses and capacity ramp up in its ready-to-eat business. Now, the stock in the last few days has hit levels there not seen since September 2019. I suspect we could well end up seeing some significant declines at the start of today's session. Now, let's take a look at what happened late last night with a couple of companies reporting earnings, neither of which is all sessions on the IG platform, but we can give you an indication as to how those stocks are due to open. As expected, the US clothing giant Gap came through with numbers last night, which were driven higher by the Old Navy brand. Gap's earnings coming in ahead of Wall Street expectations at 49 cents. 22 had been expected. Revenues 4.3 billion. We've been looking for 4.2 billion. Net income for the 3 months period ended the 3rd of February was $185 million compared with a loss of $273 million this time last year. So Gap has had a tremendous run. Sales at Old Navy grew 6% to $2.25 billion. Gap's overall gross margin surging 5.3 percentage points to 38.9. This is absolutely the reason why people have bought into this stock. I just want to show you what happened late in the session yesterday, up 9%. So that gives you a tilt at that level here, which we've not seen what's that since the 12th of February. So that's the rise expected at the start of today's session for the Gap, which reported last night. Wasn't such a rosy story when all was said and done on stock trading last night for Broadcom, another stock that's not all sessions, but I wanted to highlight this. The chip supplier to Apple, amongst other well-known brands, beat expectations in the fiscal first quarter, but there were some negatives. I want to show you what happened in terms of the numbers. Earnings per share, $10.99. Expectations have been $10 for revenue, coming at 11.96 billion, expectations 11.79. The semiconductor division revenue came in as a disappointing 7.39 billion. Now, we've been looking for $7.7 billion for this. Now, that in itself was enough, I think, to see the stock sell off. But I want to show you this in the context, the rise that we've seen since the beginning of January, where we were down to was at $10.44, closing out yesterday at $14.57. There's been a really big ramp up in the stock recently, and I think the declines that we saw late in the session yesterday, I'm going to just quickly indicate what those were. down 3%. So that gives you an indication potentially as to where that stock may open at the start today. It's not a big decline, bearing in mind the gains we've seen recently. It was just that outlook and the semiconductor numbers that were a little bit of a disappointment. Now, let's round up with a couple of other charts I want to follow up on. First of all, I want to follow up on what's happening with oil. Now, with the background to what we're seeing in terms of some of the economic turnarounds, we've got interest rates on the way down in many economies around the world, and this is widely expected to see increased demand for oil. Let me show you what happened with the oil price in the last 3 days, which has seen gains. It's gains in what has been a fairly subdued period, but I'm now beginning to wonder whether perhaps maybe there's more upside to go on this. The gains that we've seen form a nice steady rise of higher lows. We haven't yet got a higher high. I'm looking for a break of this 80.48 on US crude. Will then take us back to levels not seen since November last year. And I think that would then be, that break would be a significant move in this. Remember last Friday, Baker Hughes' weekly survey showed an increase of the total rig count of 629 rigs last week from 626 the previous week. Number of oil rigs in operation rising by 3 to 506. So that was last week's Baker Hughes rig count. The rig count comes out at 6 o'clock this evening, worth looking at in terms of the rise we've seen in the price of oil. Let me just end on a chart of gold. This is all to do what's happening with the US dollar. We are not too far away from that record high that we saw scored yesterday at 2164.9. This red line represents the record high that we saw back in December last year, the 4th of December at 2121. It's been a really amazing 3 or 4 weeks for gold, lifting up from the lows of just 2,000 level to 2061, which is where we're trading there at the moment. All to do, I suspect, with what's going on with the dollar. That's it from me. Back at 10:30, we're charting the markets. Watch out for Just Group at the start of today's London markets, looking for a potentially positive start there today. Possibly a negative start for Frasers, almost certainly a negative start by some margin. In fact, Reuters is penciling in something like around about a 16 to 20% loss in the stock of HelloFresh at the start today because of that news that they have reduced their outlook in terms of earnings. That's it. Back at 10:30, charting the